Okay, this is not a drill. Trump backed changes are coming that could completely disrupt your credit score in 2025. And if you're not paying attention, well, you could lose thousands of dollars. So we're talking about government backed credit scoring models being ripped apart, lenders getting new tools to judge you, and the end of traditional FICO as we know it. So, whether you love Trump or not, this definitely affects your finances. And I guarantee you, by the end of this video, you'll be thinking twice about how your score is even calculated. So, just before we take a deep dive, it's imperative that you hit that like button and subscribe so that you get notified the minute that we produce another game changing video that affects your finances. And I promise you'll appreciate it. So, buckle up and let's plunge a bit deeper. So, the Trump administration and his economic allies are pushing for a radical revamp of how your creditworthiness is calculated. Now, under the proposal, the focus will shift from traditional FICO scoring to a more holistic model. So it'll incorporate things like your rent, your utility bills, and even your savings rate. Now, think about that. It means that people who've never had a credit card could suddenly be scoring higher than you are. Sources close to Trump's 2025 economic platform, including interviews in Bloomberg and the Wall Street Journal, suggest that the current credit system is rigged against the working class, and it doesn't really reflect real responsibility. Instead of how much credit you use, it's about how you live. So just imagine this for a minute. Two Americans, one has five credit cards and pays the minimums every month. The other pays rent and utilities on time but has zero debt and no credit history. Well, under today's model, the first person might have a 720 credit score, but under the new system, well, that second person could very well come out on top. Now, we're also hearing about a reintroduction of national alternative scoring. Now, that's a system where federal agencies would supply and cross reference data from IRS tax records, utility companies, and even subscription services like Netflix or your cell phone bill. Now, this signals a future where payment behavior, not borrowing behavior, could define your credit score. And while that sounds promising, especially if you're in the low income bracket, it also means lenders will be flying blind for a while, leading to a stricter approval process as the new system begins to roll out. So, sorry to say this, but if you've been grinding to improve your FICO score by lowering utilization, paying old debts, and avoiding hard inquiries, congratulations. But, and it's a big but, under this new model, well, that effort might not carry as much weight. Instead, those who've consistently paid rent and utilities but never owned a credit card, well, they might actually leap ahead in the new rankings. Now, this especially benefits younger renters, gig workers, and immigrants. Now, this could also impact millions and millions of Americans who were previously shut out of the credit system. So, according to Experian, nearly 62 million Americans are considered credit invisible, or they've got too thin a credit file to generate an actual FICO score. Now, these changes will bring many of them into the mainstream economy for better or worse. But, and here's the but, as always, there's a flip side. So if you've relied on credit hacks like, say, authorized users or temporarily boosting your limits, well, those loopholes might be gone. Credit repair tactics might get hit hard. So, disputing old debt, removing late payments, and other FICO based strategies won't matter as much if the model no longer uses those metrics. So, while traditional credit monitoring will still exist, their influence on your financial future could, well, it could sharply decline. So, do me a favor. Sorry. If you're finding this breakdown helpful so far, welcome to the Financial Freedom Network, the channel that exposes the truth behind your money, your credit, and your future. So, if you're really serious about protecting your score and staying ahead of that game, Smash that like button and subscribe right now because we're just getting started. Now, according to a leaked internal memo from a major US credit union that's been obtained by Forbes, there's already concern about implementation. One executive stated, "We don't know how to underwrite risk with this model yet. If it rolls out too fast, well, we're going to have to tighten our lending standards." Now, what does that mean? Well, it means that higher minimum down payments, more income verification, and longer application timelines. Now, this is where it gets sticky. Lenders typically rely on decades of historical data to project risk, but a new model means building new models, and sadly, that takes time, resources, and regulation. And the big banks aren't thrilled either. JP Morgan Chase has publicly stated that they believe any scoring change must come from a third party audit transparency. In other words, they want to know who's behind the algorithm and how bias is being eliminated. Even fintech startups like SoFi and Chime are lobbying hard not to kill the plan, but to delay it. Now, why do you think that is? Well, the answer is simple. They've spent years optimizing apps, AI, and underwriting software around the actual FICO system. So a sudden shift could mean millions in development losses and, of course, client confusion. Now, I don't mean to fearmonger you. This isn't fear mongering, it's preparation. So do me a favor, start by documenting your on time rent and utility payments with tools like Experience Boost or Pinata. Get ahead of the curve while your payment history still matters. Opening a high interest savings account because savings rate may soon be a key credit factor, so open yours now with a high percentage rate. Linking your digital financial habits like subscriptions, app payments, and even food delivery to alternative platforms. Yes, that Uber Eats receipt might someday matter. Keeping all credit cards open and active until we know exactly what data gets depreciated. And most importantly, get your credit report squeaky clean right now. Now, if the old FICO model gets replaced, it may be your very last shot to benefit from dispute removals, utilization tricks, and aged trade lines. So, talk to a credit professional before January. Because once the switch flips, all these old school moves could be powerless. Now, I don't know if this is any help to you, but I own a credit repair company called Compassionate Credit Repair. So if you're confused or you need help, you can contact me directly at 888-702-3426. So here's the twist. All of this isn't entirely new because back in 2018, Fannie Mae began experimenting with alternative data models. So, what's different now? Well, Trump's potential executive order would make it national policy, and that would force all major lenders to comply. Now, according to a 2024 policy draft from the Heritage Foundation, which has been advising Trump's economic advisors, the new model would also integrate blockchain based identity verification, and that will prevent fraud and data misuse. And sadly, that's where it gets a bit dangerous. Any sudden shift in the rules leads to, you guessed it, absolute chaos. And chaos leads to people getting denied loans, jobs, even housing through no fault of their own. And I hate to tell you this, but this could hit people mid mortgage process. So imagine locking in a 6% rate in April only to be told your credit score is no longer valid by July. Real people, real consequences. So don't wait for the news to hit the headlines. Act now. Your score, your wallet, your financial future, every one of those is on the line. Remember, remember how we said that this could destroy the FICO system as we know it? Well, sadly, it's already started. Small credit unions and buy now, pay later companies are testing new metrics as we speak. So if you're not proactively adapting now, sadly, you'll be playing catch up when it's already too late. Want to stay ahead of the coming financial shifts? Simple. Hit that subscribe button, turn on notifications because we got deep dives coming on. And don't forget to drop a comment below. You think this new model is fair, or is it just another way to manipulate the system? And as always, this content is for entertainment purposes only. So please verify any financial moves with a licensed professional. So in the meantime, stay sharp, stay free, and I'll see you in the next video. Have a great day.